There we go. That's for the people that cannot join us. DAL, speaking of moving in sympathy, these guys also move together. I cannot stand the airline industry. As a traveler, I travel once a month and I absolutely hate it because they make it hard. They're overpriced and they don't have their act together. Technically, the chart has a problem at 47 and must hold last week's low. In fact, Friday's low. If you lose 45.4, you're probably going to go $1, maybe $1.50 lower over time. You have earnings in 3 days, so scratch that. You're gambling in 3 days. The reaction to the earnings does not have anything to do with the quality of the earnings. So if you think you know, you don't. I can prove it to you mathematically. We don't have time to do it now. I wouldn't touch it into earnings. I would defend myself if I had shares. I don't know what that is. Nothing to decipher from the chart except that it's in balance. You have a solid buyer below. From anything below 43 looks like there's a willing buyer somewhere. Anything above 45, 50, hard sellers. So if you take out 47, you can probably have $1 or $2, and you have a bunch of buyers below. So it's kind of a buy the dip comment. Deere, the industrials were on fire this past week at one point or another. Like Caterpillar, I believe, made an all-time high. Deere has a technical problem around 424. If you look left, anything above that has been sold hard. And looking back quite a few days. Meanwhile, they did make progress above this line I drew, the 400 area. So if they can stay above 404, 405 this coming week, maybe they can come up to this line that we've drawn before. So my comments are still the same. Inverse head and shoulder-ish pattern where this is the target, but they need to hold the maybe even as low as 397. If they can hold that, they can go up to that line. So it's a good little mini breakout in slow-mo. Who is this? Dollar General. Some big stuff happening. They announced closures. Is that them? Dollar Tree, 99-cent store. Do your homework. They're in the news everywhere. So I don't know where it's going to open on Monday. Was that a surprise news or what? But I know I have friends that have nothing to do with Wall Street. Did you hear the dollar store is closing? And hundreds of stores. And then another headline that says maybe there's somebody buying them out in California to keep them open. I don't know. Do your homework. I don't know if this is the company or not. We can talk about and then come back to me. Let's talk about it on Monday. Danaher. A good bounce could come up to 250, but that's a trading comment. And if it doesn't come, the next stop will be 230. So if I'm long here and they lose last week's low, I would exit and re-enter lower as a trader. If I'm an investor, I wouldn't do anything here. Okay. The P&L is not okay in my book. We have a small descending trend in revenues. So if I'm an investor, I want it below 236. If I'm a trader, you can get a bounce. Disney, I would short. In fact, I said I would short up here. By the time I decided to do it, it had fallen from here to here. So I said short to rally. So if somebody shorted it on Friday, I would have done the same. And when I say short, I mean sell a call spread. Earnings are in 31 days. It is a headline stock, so you should be aware of that. I think they will repeat those lower lows. So there's a good chance Disney is at 114 in the next 2 to 3 weeks. I would not hold a put, at least not a short-term one. I would sell calls or a call spread. If I own shares, I would sell covered calls. Okay. All right, so this one does not have any earnings, right? So you're going on price action, and the chart is pretty wild. It can drift down to 34 or 32, and it may bounce there, and if it loses 32, it may go down to 20. So rallies will be met with sellers at 52. This is not a political statement from anybody. You should not trade it based on your political beliefs. Trade it based on the chart and the fundamentals. You're either investing in it for the long term, and in which case I wouldn't do anything, or you're trading it. You have a hole in volume above 54 and a hole in volume below 34. You lose any of those, you're going to go in that direction. So if you take out 54, you may slip back up to 70. If you lose 34, you may go down to the teens. It's as simple as that. Until then, you have a hard buyer below and a hard seller above. DraftKings. And if you don't know what I just said, you have no business trading that stock, by the way. because it's completely in the hands of the chartists. And if you don't know charts, stay away. DraftKings, so this might move with the casino stocks. You have a hard seller at 48 and 50. If you can get to 50, you can get to 55 or 54. Meanwhile, you have a solid consolidation. See, there's plenty of volume. So if it drops below 44.50, you have all these transactions that are willing to wake up. So solid support inside the zone below 44.50. That's all I have to say. And not a lot of sellers up here, so it might be easy to go. I see you if you're long. Devon. So no way on earth would I go long a stock as good as Devon. I don't care what it is, into these prior. Just ask this person or that person or this person or that person, what happened when you got into the stock from this area? They'll say disaster. So Devon's end zone, I think, is somewhere around 56, give or take a buck. So if I'm an investor, not for me. And it's only rallying because of energy meme from Goldman Sachs. I can't believe, I'm so upset and jealous about Goldman Sachs' ability to be able to create its own profits. Oh, we think oil is going to 100. Boom, oil goes to 100. Just because it's a self-fulfilling prophecy now. And if it does get to 100, I think all stocks are in trouble, because I already pay $5.50 and $5.70 for gas in California. I'm just saying, inflation will come back. ELF, so this is like ANF, had no business being up there. At least this one, sales do grow, unlike the other one. And now it's just coming back to reality, not because it's a terrible stock, because it lost the technical support, and this is the area, and it has no support. When a stock goes this quickly, giving back fast is normal. In fact, if you believe in Fibonacci, stabilization can extend through 144, 145, 146. So for me, I would not catch this falling knife until it gets below 144 or 5. If I'm an investor, I would absolutely not add here. No way, because I made my bed and I'm going to lie in it until it goes back up there. That's the technical comment. It will get a bounce towards 177, and that would be a way for me to get out. Let's say I bought it here and I'm down 40%, and this brings me down to being down 10 or 15%, I would exit. If I'm a trader. If I'm an investor, do whatever you need. I wouldn't add. I don't know what this is. Enbridge, okay, we discussed it. This is a bearish chart. If Enbridge doesn't come back up to 48.80 or 49, it's probably going to 47. It's almost a guarantee. All right. Enphase. It's in balance. It has a lot of sellers. I don't think it can crack into 126. And if you lose 106, you might come down to this support zone, in which I will go long. So I do like trading this company. Good P&L, good technology and all. But it does trade on headlines of other companies. First Solar, anything from solar, anything from the industrial affects this company. So if I'm long, I'm not adding. Yes, there is support at 106, but I would not add. If I wanted to get long here, I would make it partial or an immediate stop, like a trade, not an investment. Long term, it's a good company. I just think it's vulnerable on headlines for now. EPD. This chart is amazing, but it's too amazing. You might see it at 28.20 in the next month. Who is this? FL? FI? Fiserv? Sounds like a fintech company. All right, so I'm looking back at this February reaction to earnings. You have a flash low to 137, a flash high to 153. Wow. So consider that playground, right? So support at 152 or lower from that reaction. Up here, I mean, it looks like there's a hard seller at 158, 159. I would not go long. Flex, same comments, a lot of sellers above and a lot of buyers below. There's a gap down to 27-ish. Maybe they want to go back and fix that gap. There might be some imbalances there that the chart wants to go fix. So I would not buy a call. FSR, why is that here? I refuse to talk about it. Okay, so this is Fisker. No, I don't know what this is. we're going to skip it. If you're asking about Fisker, the company is toast. What are we doing, right? It got delisted, so it's gone. FUBO. I don't know why we're trading FUBO also. What are we doing here? This is just garbage. All right. I don't know what to say. Fundamentally, technically, not a lot of clues here. Unless you're trading minute to minute, what are we doing? If you own shares, then there's nothing to do unless you decide to say you've had enough. Is this even a buyout candidate? I don't know what they're all about anymore. All right, so the chart doesn't offer anything except for the fact that it's trying to consolidate at this level. If you lose 146, you're going probably to zero. I'm not sure. Just be careful. GoDaddy, the opposite. It cannot stop rallying. What is happening here? What the hell is this? So tell me, how is the net income higher than your sales? So clearly, is there a buyout candidate here? If that's the case, then why are we talking about it? If there's a buyout, just do some arbitrage. I don't know what to say about this. I honestly don't. So do homework. Was that a buyout? What is it? Did they win a lawsuit? Where did they get all the net income with no revenues? And the chart is off the chart. Somebody bought them out. That's probably what that is. Anyway, GDX, those are gold miners. It does move in sympathy with gold, but it doesn't follow gold. I'll give you an example. If markets crash, stock markets, and gold spikes, this one will not follow gold. It may follow gold for 1 day or 2 days, but then it turns around and follows the stock market. So if you're trading gold, GLD is your thing, and it's an all-time high. That's proof right there, right? The GLD is an all-time high, gold, and GDX isn't. Why not? It's going into prior sale, right? So if I'm long, that's where I exit. It looks like a new breakout, so you might get another $2 out of it. So if you're a momentum trader, maybe you can hop on here and get those $2, or you get stuck. So decide which person you are. And if you are a momentum trader, why don't you wait for a red tick like these to get long, or even this one or this one. So if you don't know how to do that, this is not your entry. GE, same. I'm short and I'm losing money, and this split I did not see coming, and the tick, you know, we made money for like 10 minutes and then the market bought it back up because the way they said it, it fell 22%. It didn't fall 22%. They just sliced the company 1/3 time. So now they're buying it back up as if it's trying to recover what it lost. It's a mystery. I wouldn't touch it. GE Aerospace now is split up from healthcare and energy. So you have GE, what is it, AV or EV, and GE, the healthcare company, HC. This one has never been higher. So oh, wait a minute. Okay, it has been higher. Hopefully they adjusted the chart. So if they take that out, this is either an endpoint zone or a catalyst for doubling. If you think that GE can double from here, then stay long. Otherwise, I would wait for a dip to get long. I still own my puts. They're down a lot. It wasn't a big position. I have not added to it. Maybe I'll get upset at it one time and add to it, but I won't. I will probably call it quits this week. This one is doing exactly what we thought it would do, Gilead, this blue line. And now it's falling into a pretty strong base. So I would stay. If I'm long, it's too late to panic. If I'm looking to get long, maybe I'll take a small bite, an starter entry position. Shares would do, selling puts to own shares would do, buying calls would not do for me because it looks like it bounces, but it bounces into 72 and it's going to be very difficult to crack in above that quickly. Earnings, 18 days until earnings. Maybe the company will give you a reason. See this quick rally? It's pricing out pretty quickly, so there's not a lot of volume to support you here. So it's kind of like too old to matter much. So this whole zone is support. GLD, I don't know what you want from me. It's an all-time highs. You love it, go for it. I wouldn't, but go for it. I have physical gold. I'm not going to go out and sell it, but I'm not trading the GLD long up here. It is in full breakout. There's no resistance. It's in open air. Okay, so it can go wherever it wants to, but I think it should dip anytime soon down towards 208. On GLD, if I had a credit call spread, and it's in trouble. I will decide this week what do I want to do with it. Book the loss, roll it up, or roll it up and out. They don't pay dividends until a few weeks from now, and you have to pay attention on that. You do not want to hold a sold call on the day it goes ex-dividend. There'll be a lot of drama overnight. Reach out if you don't know what that means, or read about it. Okay, so Alphabet stock is behaving pretty strong, which is not characteristic of this company in the olden days. But these days, it's been an inspiration to the market. So this was a Gemini spike, the headline rumor of Apple using Gemini for AI. They've overcame it last week. So that's a pretty tall, skinny leg. Let's see if they can go above 155 this week. How about this? Super strong company for the future and all of that. Technically, right? We're trying to see if it has a dip or a rally and what the market will do with that. So if they crack above 155 before 148, that would be a huge accomplishment. So that's what I'm looking for. Will they lose 148 or go above 155? I wouldn't short it, but as an investment, there might be better entry points for the long term. Goldman Sachs, I would short it. I would short rallies in Goldman Sachs. I am short the XLF and JP, so I would not, because those are similar companies. I'm not shorting its fundamentals. Chart comment on Goldman. Okay, so how about I say this? I would not be surprised to see it cover the gap at 395. What gap? This gap. There's no volume. That's a weak spot in the chart. Who is GTN? Gray Television. No clue what that is. Let's see, do they have sales? Very small company. Okay, so I don't know what the fundamentals are. Technically, you do not want to lose 5.4, because if you do, you're probably going to lose $1 over that. And if you rally $1, if you rally into the bottom end of this area here at 7.3, I think it's going to be a problem once you get there. Halliburton, too high for me. I think it's rallying with oil. Oil is going to the moon. And is this an all-time high? Yes. So not for me. Would I short it? I probably could. How just a simple debit put spread would do. Go out a couple of months, buy a $10, $20 wide debit put spread, spend some money on it. And if it falls, it doubles your investment. If it doesn't, you lose a little bit of money. Stop out. Don't let it go to zero. Home Depot. Home Depot, I still stand by my top hat. So it looks like it's starting to do this for me without popping. Well, it did pop a little bit. See, it popped a little bit. I gave it more room. I know there's sellers above. There is a seller right now. I'm going to bring this down to here. So a rally into that line at 366 is probably going to trigger a sell zone. And now I'm going to tell you, if it loses 348, I don't know how low it goes. Actually, I do know, but I'm not going to say it. So I would use rallies to get out of the stock. Because if indeed we're tapped out as a consumer, and if indeed we have a huge problem with real estate, this one's going to be really hit hard. HIMS, this is a pretty exciting business. It's weird, but it's exciting from the standpoint of potential. I don't know how Amazon's going to compete with them, but this chart doesn't inspire starting longs. So I would do it. I would wait for the next crash on somebody's headline and get long. If I'm an investor already, I would make sure to lock some profits. I'm not saying it's to short it. I'm just saying it's vulnerable. Anything that look at this. There's no transactions here. It's just whoosh, straight out to the moon. It's not normal. It's normal to come back and establish here. The P&Ls look pretty solid. Hood, I wouldn't touch it. I was long Hood by mistake, and I got out, and I never looked back. I didn't time it perfectly, but I want nothing with it. Nothing to do with it. I honestly did not know the story on how they actually cheated their clients during the pandemic. Like they actively cheated their clients, and how do people stay with them? How can you trust them? They talk about crypto companies, not trusting crypto companies. This guy actually cheated you, and you still choose to trade with them. That's pretty weird. There are plenty of brokers out there. So one day people will wake up and just move brokers. Until then, this rally is too strong. I would not get engaged on the long side here. I don't want to short it because it's a headline stock. I just wouldn't touch it. It's not the kind of stock I would invest in it. Trading wise, you have support at 1650, and if you lose that, 14 or 1350 would be better area. Hershey's, crazy story. So it falls apart because of a diet drug. Don't you think that people that are addicted to chocolate would eat more chocolate if they knew that there was a diet pill or shot or whatever? So this was an entry opportunity for an investment. If somebody bought Hershey stock as an investment, there's nothing to do here. You have a lot of sellers above 204. I think it will take a lot to get above 204. But it also would take a lot to get below the base they just placed. So can it fall a little bit? Yeah, it can fall 5%. But then you hit a floor. So don't panic if you see it lose 5%. Humana, different story. UNH, different story. They had bad news and they lost technical levels. In fact, support, you see my comments? Look at this. So we knew that there was technical risk support. If lost, you get to here. If lost, you get to here. Well, they're almost here. Let me zoom back out. When they lost 424, they triggered a potential 116 to 140 point drop. So 116 they're already fulfilled. 140 is still lower, 278. So my arrow still stands down there. But the easy drop has happened, right? So now we're in the pandemic area. Unfortunately, it's too old and too wide to say, okay, this is support. So what do? You make a call. You say, okay, last week's support was the bottom, and you use that as your baseline. So if you went in as an investment last week, solid. However you went in, hopefully not with calls. If it's with calls, trade it and re-enter. If you bought shares, then there's nothing to do. You did it well. You got in at the right time. Exact same comments for UNH. IBKR, that's a pretty strong chart, pretty strong P&L. I missed the entry. I wouldn't touch it. This is where it's too high to chase right now. As an investor, you might want to look for better entries. Target 2 is 110. Target 3 is 106. So 106 would be entry 1 of 2. The second one, I wouldn't touch it until it loses 99. Look left. There's no support. No, this whole thing came so fast, there's no transactions that are going to provide you with support. Look at the volume down here and look at the volume up here. So if you lose this volume node of 106, I think you can easily get to 95. So use that logic. So how do I see this happening? Okay, is there earnings? Oh, earnings in 9 days. Okay, I'm going to draw it anyway. And if they bounce here and they lose that, they go boop, they try to recover it, and then come back down to here. That was a little exaggerated right there. So I will put, there's a support zone in here. Okay, there's a support zone in here. If you lose that, that triggers you. If you can't recover that. So if I do this, I think that'd be more honest. There we go. That little drop here went too far with the poop. Okay, ICE. It's also in the stratosphere. Losing 134 will get you 130. And then above here, it doesn't take much to break out of those. So you have the opportunity to take out 139. And if you do, those should be easy to take out so you can get to 44. Those are trading comments. Investment comments, not a good place to start. Look at it. Ask the people on the left if they were happy buying it up there. They probably say no. Intel, avoid, avoid, avoid. Loser company. What do I mean? Literally losing. Not like loser people or anything. They are literally losing. There was a day not too long ago, maybe a couple of years ago, when Intel was bigger than AMD and NVIDIA put together twice over. Think about that. And now it's at par with NVIDIA on sales. What happened? That's what they're asking themselves. If they're not, then definitely short it. So what do? Nothing. Technically, it's falling into a support zone that extends through 34. That white box is support, but look how wide it is. I wouldn't touch it until it goes to the low 30s. As an investment, you can nibble here for the super long term, but markets are at all-time highs. AI is at all-time high. The excitement for tech is at all-time high, and that's the best it can muster. So I can't help to think that there's better days ahead from a lower perspective. So if I'm long, I'm not adding. I wouldn't exit because of my comments, but I wouldn't add. If I'm looking to get long, I would take partial position, like 20% of what I want to own in the end. All right. Oh, IoT. Samsara. That's an Arabic word. Is that a market of something? Okay, broker. A breakout, a pop into 37, I think would be met with sellers, and a drop into 31 would be met with buyers. I think it can pop. It hit this red W. It hit 3 targets of those. You have a lot of buyers through 32, so it's too late to panic. I would use the next pop to get out of my longs, to be honest. I don't want to talk about losing this because that will bring mid 20s, but you have plenty of support below. IWM, it'll be part of my review, so I'm not going to spend much time here. Okay, 205 is your pivot, spin your pivot, so I'll have more on that one tonight. JK Solar, again, these guys trade as a unit. You better put in front of you the calendar of all of them. So this P&L is okay. Technically, it's not okay, lower lows, lower highs. If they cannot stay above 24 or 25, I think they go down to 20. JP Morgan. I'm short. I'm going to tell you, if I were allowed to cuss, I would say, what the F was this on that day? What the heck was that? What is that? We had a similar flash crash with the NASDAQ the other day with the Qs, 435. And then within the next couple of days, we went back straight for it. I don't know what this is. I'm short. We'll see. Technically, I would not get long on JP Morgan. JXN. I'm not aware of this company. So is this an all-time high? Yeah, I don't know. How could this company, P&L, looking like this, be doing that? Yikes. So if you're an investor, I would take the money and run. I don't know. Unless you know something I don't. What the hell is this? Oh, my Lord. An investment holding company. Is this a SPAC? Whew. Yeah, please be careful. Technically, this looks fake. Which means what? I wouldn't touch it with a 10-foot pole. That's me. Kellogg's. Boring company. No. K. Who is this? Kellanova. It looks like I've covered it before. Let's delete those. Looks may have split or something. All right. So once they lost 60, 60 becomes a problem. So now here it looks bullish. You may get to 60 or 62, but that's an exit. So if I'm long, if I'm looking to get long, I would buy the next dip for the curl and pop. That's a trading comment. And the closer to 56, the better. I don't think it's easy to break through this, but if you do break through this, you have a little bit of upside. Craft. The easy rally happened. Now you have to tackle this. I don't think they have enough strength to muster to muster to get up there. I don't know. Let's see here. Buy the dip into 35.50 would make more sense than to chase the rally, but they are on a jag, and this would be a positive catalyst for a couple more bucks at least. All right, video 3. I'll stop recording.